Dear students, I am Professor Prakash Rao. Perhaps you are already familiar with me due to my earlier videos, as I have already presented 14 videos under the subject Indian Accounting Standard. This is my 15th video, and this video covers IND-AS 36 impairment of assets. Let me explain the objectives and scope of IND-AS 36. The objectives of the standard may be mentioned as to ensure that assets are carried at not more than the recoverable values. That means when the assets are presented in the financial statements, that is in the balance sheet, the value shown in the balance sheet should not be more than its recoverable value, that means marketable values. The standard also specifies when an entity should reverse an impairment loss. That means there may be a case wherein impairment or loss is recognized earlier, but subsequently the impairment gain is seen. In such case, reverse of impairment loss is allowed under this standard, and it also provides for disclosures while preparing and presenting financial statements. What should be disclosed, that is stated in the standard IND-AS 36. Scope of this standard. The standard applies to all assets including current assets other than, that means exclusions, because those exclusions are covered under different other standards. Inventories, it is covered under IND-AS 2. Assets arising from construction contracts covered under IND-AS 11. Deferred tax assets covered under IND-AS 12. Assets arising from employee benefits covered under IND-AS 19. Financial assets that are within the scope of IND-AS 39 covered under that separate standard. Biological assets covered under IND-AS 41. Deferred acquisition cost and intangible assets arising from insurance contracts covered under IND-AS 104. Non-current assets covered under IND-AS 105. These exclusions are there. These are not covered under IND-AS 36. For all other assets including current assets, the Act applies. Now, some of the definitions we should consider before going through the meaning and application of impairment loss. Impairment loss, it is the amount by which the carrying amount of an asset or cash generating unit exceeds its recoverable amount. That means when the amount shown in the balance sheet is less than its recoverable amount, that is marketable value, then that loss is known as impairment loss. Carrying amount, it is the amount at which the asset is recognized after deducting any accumulated depreciation, amortization in respect of intangible assets, and accumulated impairment losses thereon. That means it is carrying amount means it is the amount shown in the balance sheet after all adjustments such as depreciation, amortization, etc. That means it is the net amount shown in the balance sheet. Cash generating unit, it is the smallest identifiable group of assets that generates cash inflows that are largely independent of cash inflows from other assets or group of assets. It means some of the assets put together will perform certain activities and that will generate some cash, and such group of assets may be known as cash generating unit. Apply CGU, cash generating unit concept. When the asset does not generate cash inflows which are independent from other assets, and the asset's fair value less cost of disposal also cannot be determinable. If the asset's fair value less cost of disposal is higher than its carrying value, in such case, same asset has to be tested for impairment individually. That means if an asset's disposable value cannot be determinable and it is independent of other assets, and if its fair value less cost of disposal is higher than its carrying value, in such a situation the test of impairment of that asset is necessary, and that is done individually. How to calculate impairment loss? Impairment loss is recoverable value minus carrying amount. In this case, recoverable value is less and carrying amount shown in the balance sheet is more. That difference is known as impairment loss. If recoverable amount of an asset is less than its carrying amount, as explained in the first case, the carrying amount of the asset shall be reduced to its recoverable amount. This reduction is an impairment loss. When the amount shown in the balance sheet is less than its recoverable value, then that difference is known as impairment loss, or that reduction that is made on the value of the asset to be shown in the balance sheet is known as impairment loss. If recoverable amount is more than carrying amount of an asset, then no impairment gain will be recognized. Only impairment loss will be recognized, whereas no impairment gain will be recognized under the standard. Recoverable amount fair value concept. Recoverable amount shall be higher of the following amount. Fair value less cost of disposal, that means fair value of the asset that is assessed minus its cost for disposal. Then value in use. Out of these two, whichever is higher will be taken as a recoverable amount. There are two concepts explained here: fair value less cost of disposal and value in use. We shall see the elaborated meaning of these two concepts. Fair value less cost of disposal. Cost of disposal are deducted while determining the fair value. From the fair value, these costs are deducted to get the net fair value. Legal costs, stamp duty and similar taxes, cost of removing the asset, incremental cost for bringing the asset into conditions for its sale, other costs associated with disposal or sale, etc., are deducted from the fair value. That is easily understandable. Then value in use. It is the present value of the future cash flows expected to be derived from an asset or cash generating unit. That means from the CGU, cash generating unit, the cash will flow into the organization. That flow of cash, that is estimated future cash flows, is discounted by applying a discounted rate. That is known as value in use. That is the present value of future cash flows to the organization is value in use. Recognizing and measuring an impairment loss. If recoverable amount is less than carrying amount of an asset, then impairment loss is carrying amount minus recoverable amount. Carrying amount is more than the recoverable amount. In that case, the difference is known as impairment loss. Impairment loss to be recognized as an expense in the profit and loss account if there is no revaluation. That means if on a particular asset revaluation is not done, the impairment loss recognized has to be treated as an expense and debited to profit and loss account. On the other hand, as a decrease in revaluation reserve, that means if revaluation is carried at periodically, then in such a case the revaluation reserve will be there, and on that reserve the impairment loss is adjusted as a decrease. Then after recognition of impairment loss, what should be done? Adjust depreciation amortization charge for the asset in future periods. That is, after impairment loss, periodically, or normally it is done annually, adjust the depreciation and amortization charges for the asset for future periods. Then allocate the assets revised carrying amount less residual value on systematic basis over its remaining useful life. That means after impairment loss, the leftover amount that is shown as value in the value of the asset in the balance sheet, that is known as carrying amount, less residual value if any, that is after the life of the asset some value may remain, that can be residual value. That amount is deducted and that carrying amount is systematically allocated over remaining useful life. That means it is depreciated over remaining life. Then when to test for impairment? That means when to recognize impairment loss, it can be conducted on annual basis. Normally, impairment loss is done on annual basis. This standard says it should be conducted. It can be done on annual basis. Test for impairment annually when intangible asset has indefinite life or intangible assets are not available for use. That means in case of fixed assets, for example, intangible assets has indefinite life. Their life is not yet decided. Or in case of intangible assets, if the asset or assets are not available for use, in such case test for impairment annually is necessary. Whenever impairment indicators occurs, that means when test of impairment is necessary, then there are external indicators and internal indicators that should be seen on the asset with reference to the asset. Then external indicators. What are the external indicators? Significant decline in market value. That means compared to market value, the value of the asset held by the concern is decreasing. It may be due to change in technology, market, economic or legal environment. For example, nowadays COVID-19 is spreading as a pandemic. The market values of assets of a concern may be decreasing. Change in interest rate that may affect the value of the asset. Low market capitalization. These things are the external indicators which should be taken into account. Then internal indicators. Assets performance is declining, maybe due to obsolescence of the asset or change in technology, etc. The assets performance is declining. Discontinuance or restructuring plan. If the company is having discontinuance or restructuring plan, then also the assets future life is in question, then it is an internal indicators. Evidence of physical obsolescence. That means the asset is being old, then it is considered as internal indicators. These external indicators and internal indicators are to be considered for testing impairment. Then impairment loss for cash generating units. Allocation of impairment loss in the following ways. That is, after recognizing the impairment loss with reference to cash generating unit, first to the carrying amount of any goodwill allocated to for cash generating unit. For the cash generating unit, if any goodwill is recognized, then the impairment loss should be adjusted with that goodwill. It should be deducted from that goodwill amount. Then the remaining amount to other assets, the remaining amount will be allocated to carrying amounts of other assets individually on pro rata basis. The carrying amount of an asset which is part of CGU should not be reduced below the highest of, that means after allocating the impairment loss, the carrying amount should not be reduced below the highest of these three, that is its net selling price if determinable, its value in use if determinable, or else zero value. So the value of the asset cannot be shown less than zero, it cannot be shown at a negative figure. The absence of goodwill allocated to the CGU, that means if there is goodwill allocated to the CGU, then the impairment loss is adjusted with the goodwill, and if that is not sufficient, then to other assets it is allocated on pro rata basis. Whereas if there is no goodwill at all allocated to cash generating unit, the amount of the impairment loss that would otherwise have been allocated to the asset, that means if there is no goodwill, the amount will be allocated to the asset itself. Then it should be allocated to other assets of the CGU on pro rata basis. That means it is not allocated to a particular asset for which impairment loss is recognized. The amount of impairment loss should be allocated to other units of CGU on pro rata basis. Proportionately it should be allocated. We shall consider some examples under CGU. M has 5 stores including store X, wherein purchase, pricing, marketing and advertising are done from corporate level, that is at head office. Can X be CGU, cash generating unit? The analysis is given here as part of the solution. Internal management reporting is organized to measure performance on a store-by-store basis. Normally, if a concern has a number of stores, this will be done. That is, internal management reporting is done for each store separately. The business is run on store-by-store profit basis or on a region city basis. To each a concern may be having different stores, and each store may be referred as a profit center. Therein each store is recognized separately. But cash flows generated by store X are independent of cash flows from other stores. Each store's cash flow is recognized separately. So taking into account these indicators of CGU, the answer should be, for can X be CGU, the answer can be, or answer should be yes as per this standard. Other example, company A has two plants X and Y. Output of X is used by plant B. That means the concern is having two plants. Output of one plant, that is X, is used by plant Y. However, there is an active market for the output of X. Though X can sell its products directly in the market, the output is used by other plant of the company. Identify the CGU. In this case, both X and Y are profit centers or cash generating units. That's why the answer should be both X and Y are cash generating units. Example 3. An entity has a company office building which is used for the internal purpose, but the entity gives on the rent half of the office building to third party. Identify the CGU. Now the company is having an office building. Part of that building is given away on rent basis. That means that part generates cash and it is being used for internal purpose also. That's why the answer should be whether it can be CGU. Yes, the answer should be building in its entirety is CGU. That means whole of the building can be considered as CGU, cash generating unit. Now example on recognition and measurement of impairment. Earth Infra Limited has two cash generating units X and Y. There is no goodwill within the units carrying values. The carrying values of the cash generating units are CGU A rupees 20 million and CGU B for 30 million. The carrying values, that means amount shown in the balance sheet of the company of A is 20 millions, B is 30 million. That is the book values. The company has an office building which it is using as an office headquarter, has not been included in the above values and can be allocated to the units on the basis of their carrying values. So on the basis of carrying values of A and B, the value of building can be allocated. The office building has a carrying value of 10 million. The recoverable amounts are based on value in use of rupees 18 million as per the standard for CGU A and rupees 38 million for CGU B. Required. Determine whether the carrying amount of CGU A and B are impaired. Now let us see the analysis. As part of the solution, we shall analyze it. Compare the carrying amount of that group of cash generating units, including the portion of carrying amount of the corporate asset, that is office building. That means unit A and B and office building carrying amount should be analyzed with the recoverable amount of the group units. As given in the illustration, we should see what are the recoverable amounts. That should also be taken into account. Any impairment loss should be recognized in accordance with IND-AS 36 and impairment loss, if any, must be seen. The office building is a corporate asset which needs to be allocated to A and B on reasonable and consistent basis. Now we shall see how this can be done. The table explains the details. There are two units A and B, carrying value of CGUs 20 million and 30 million, totally 50 million. Allocation of office building. Office building is having a value of 10 million. On the basis of the carrying value, that is value in use as given in the illustration, 20 million and 30 million, that ratio is considered, that is 2:3 basis. The office building value is allocated to A and B. Carrying value of CGU after allocation of capital asset. That means office building value is added to A and B. 20 plus 4, 24, 30 plus 6, 36. Total it makes 60 million as the value, total value of A and B. Now recoverable amount as given in the illustration is for A it is 18 million, for B it is 38 million. Compared to the carrying value of A, the recoverable amount is only 18 million. So difference between carrying amount and recoverable amount, that is 6 million, is impairment loss. Whereas in case of B, 36 million carrying value is there, recoverable amount is 38 million. There is gain, that is impairment gain of 2 million, but it is not recognized, so it is left blank. The column is left blank. Now this 6 million impairment loss should be treated. The impairment loss will be allocated on the basis of 4 by 24. That means for the office building, impairment loss is to be taken as 1 million, and the remaining amount after this allocation of 1 million to office building, remaining amount of 6 million impairment loss, that is 5 million, is to be allocated to other assets in the ratio 20 divided by 24. That is 20 is the carrying amount of other assets. Total value of the assets including office building is 24. On that basis, remaining 5 million is allocated as impairment loss to other assets. So that ends the explanation with regarding the last illustration. Hope you have understood the illustration and the explanation given.